Hello. Welcome to our next chapter, that is your tax invoice, credit and debit note. Easy chapter, small chapter. We will do it very quick. So our first topic is when to raise tax invoice. What is the time period that you have to raise tax invoice? So I have bifurcated this into two. First is your goods, second is your services. That is for supply of goods. When do you have to raise a tax invoice? And for supply of services, when do you have to raise a tax invoice? Okay. So when there is movement of goods, in case there is movement of goods, time limit is at the time of removal. That is when the goods are being removed from the warehouse. That is when the invoice needs to be issued. Next is if there is no movement of goods, then in such a case it will be at the delivery of goods. When the goods are being delivered, that is when the invoice should be issued. If it is a case of continuous supply, then in such a case, that means there is no one point of time when the supply is made. This is made over a period of time. Then when each successive statement of account is issued, or when each payment is received, whichever is earlier. Okay, whenever there are two, of course it is earlier. So when the statement is received, that is when the hisab is received, that boss, you use itna, you use itna for such period, whenever that statement is issued, or when the payment is made, whichever is earlier, that is when you have to issue tax invoice. Okay, so because if you remember, we had done that when invoice issued or when invoice ought to be issued under time of supply chapter. So over here, if you have to watch this video first and then you can do that chapter, that is your time of supply. Okay, any sale or return basis is you have given the product to the customer, and only if he accepts the product will it be considered as a sale, otherwise he will return it to you. So sale or return basis, or if it is taken outside India for exhibition, if the goods are taken outside India for exhibition, when do you have to raise invoice? Before or at the time of supply, that is when the acceptance you receive, that will be considered as your supply, or 6 months from the date of removal, whichever is early, that is whenever you receive the acceptance, or 6 months from the date of removal, that is from when you have removed from your warehouse, whichever is earlier, that will be considered as the date when your invoice should be issued. Okay, now for services, it is usually within 30 days from service. Okay, it is usually 30 days from service. However, for insurer, banking companies, and NBFC, time limit given to them is 45 days from your service. That is at or after service, but within 45 days from service. For everybody else, it is 30 days. What you have to remember is 30 days. Okay, do not just think that others means you can ignore. Others is basically, this is your actually main provision. Is that 30 days for everybody. Just for these people, it is 45 days. Okay. If any insurer, banking company, or NBFC makes supply to a distinct person, in such a case, it will be before or at the time when the supplier recorded in his books of accounts, or before expiry of quarter in which the supply was made. If he supplied it to a distinct person is, for example, a banking company has one branch in Maharashtra, one branch in Karnataka. So these are both distinct persons. So in such a case, it will be made when supplier has recorded in the books of accounts, or before expiry of quarter in which the supply is made, whichever is earlier. Great. Okay. If it is a case of continuous supply, for example, if it is a case of continuous supply, that is, it is done over a period of time. So if the payment due date is ascertainable, that is, if you know when the payment has to be received, it will be on or before the payment due date, not later than, it will be on or before. If the payment date is not ascertainable, that is, you do not know when you will receive the payment, in such a case, it will be before or at the time when the supplier receives the payment. That is, whenever you receive the payment, you have to raise the invoice. And third is when the payment is linked to event completion. That is, you have given a condition that was only and only when this condition is satisfied or this happens, you will get the payment. So in such a case, it will be on or before date of completion of event. That is, whenever the event gets completed, that is when you have to raise the invoice. And last case, if the supply ceases before completion, that is, before you could give the whole service, your supply has stopped. So it will be at the time when supply ceases, to the extent of supply. How much ever you have supplied till now, you have to raise invoice for that portion. Clear? I hope this is clear. If you want, you can pause it. You can take screenshot, however you want, whichever is helpful to you. Great. So now next is mandatory fields in invoice. What are the items that you definitely have to put in the invoice? So first is, of course, not very important. This you can skip. So there is name, address, GSTIN of supplier, and if recipient is registered. If the recipient is not registered and supply is more than 50,000, if the value of supply is more than 50,000 and recipient is not registered, then the name, address of recipient and delivery, all of this needs to be there. Your HSN code, this is the identification for goods and services. Description of goods and services, quantity of goods, this has to be there. Your signature of supplier, no needed if it is a e-invoice. Supplier means the person who is supplying the goods, his signature should be there. Address of delivery, if different from place of supply, if the place of supply is different and the delivery is different, for example your bill to ship to model, in such a case address of delivery also has to be there. Then of course your date of invoice number, which can be maximum 16 digits, this can be an MCQ. Then your value of supply of goods and service, of course your invoice value needs to be there. What rate of tax has been charged, what is the amount of tax, what is the place of supply, and what is the state's name, and whether tax is payable on reverse charge mechanism, that also has to be mentioned on invoice. And QR code if it is a e-invoice. Okay, so you also need QR code. We will be doing everything what QR code is. So as we did over here HSN code, so there is a small provision with regards to HSN code. So number of digits in HSN code, that is HSN code is a long number, so how many digits do I have to put in there? So if your annual turnover in the preceding financial year, in your last financial year, if your annual turnover was up to 5 crore, that is less than or equal to rupees 5 crores, and you are making B2B supply, B2B supply, your business to business. So in case of business to business supply, you have to have 4 digits of your HSN code. However, if it is a B2C supply, that is business to customer, business to consumer, in such a case, 4 digits, but it is optional, that is you may or you may not. However, if your annual turnover last year was more than 5 crores, then you have to put 6 digits, irrespective of if it is a B2B supply or a B2C supply, 6 digits have to be there. Okay, now what is the concept of e-invoicing? Does e-invoicing mean that my GST portal will generate invoice for me? No, e-invoicing does not mean that. E-invoicing E-invoicing means invoices to be reported to IRP, which will generate IRN and QR code. So you have to give it to the portal. You have to upload your invoices to the portal, and then they will give you an IRN and QR code in response. Okay, it is mandatory. It is mandatory. You have to remember it is mandatory for registered business with turnover in any financial year from 2017-18 onwards, which is greater than 10 crore. This limit they have been kept on reducing, which has now come to rupees 10 crores. So e-invoicing is mandatory. If from the financial year 2017-18 and onwards, if your turnover at any point of in at any year was greater than 10 crores, e-invoicing becomes mandatory. That means you have to upload them to the IRP portal, and that will generate your IRN and QR code. Who are exempt, who do not have to follow this? SEZ units, insurer, banking company, your GTA, transport by road, supplier, passenger transportation service, and your multiplex screening. For example, this is your IMAX, etc. They do not have to do any e-invoicing. Okay. Now, next part is with regards to dynamic QR code. What is your dynamic QR code? Dynamic QR code is all B2C invoices issued by a registered person. Any B2C invoices, that is business to customer invoices, which have been issued by a registered person whose turnover in any financial year from 2017-18, remember over above also the year of 2017 and 18. If sorry, excuse me, from 2017-18 onwards, if your turnover was greater than 500 crores, they need to have a dynamic QR code for digital payment. For example, this is your Bheem UPI, so you give them a QR code that boss, you can just scan this and you can make the payment. So there's a surprise for you if you scan this QR code. So exempt is SEZ units, insurer, banking company, GTA, road, supplier of passenger transport service, multiplex screening. Of course, these are all the same above. Who are new people that have been added here is your OIDAR supplier, your exports, where place of supply is in India. Okay, so these people are exempt. They do not have to follow your QR code. Great. Most people must have already vanished. They are trying to scan this QR code. Okay. Now next is your revised tax invoice. In some cases, you may need to issue a revised tax invoice. That is, you have already issued a tax invoice, but due to some changes, you now have to issue a revised tax invoice. So For example, your effective date of registration. Why do you have to issue a revised tax invoice? Because the period from when you are actually liable to register till the date you actually get your GST registration, your effective date, if you remember, your effective date will be considered from the time when you are liable to register. That means all the supplies that you make from your effective date of registration to the date when you actually when you actually receive your GST registration, all the supplies, ideally GST should have been charged on these supplies, but you did not have a GST number only. How will you charge GST? So therefore, during this period, you did not charge any GST. However, you were supposed to charge GST. So therefore, all the invoices that you raised during this period, you will have to revise them and you will have to raise them again within 1 month from when you get your registration certificate. Therefore, this is the arrow: within 1 month from when you get your registration certificate, you have to issue revised tax invoice. Okay. Any registered person may issue consolidated revised tax invoice for supplies to unregistered recipient. This cannot be done for interstate supply if value of supply is greater than rupees 2,50,000. So if it is interstate supply, you cannot issue reverse tax invoice if it is more than 2,50,000. That means up to 2,50,000 is allowed. And for unregistered person, you can issue a consolidated invoice. Great. Okay. Now, if you do not know, if the rate is not determinable, so when at the time of receipt of advance, if you already received the advance, if you already received the money, but you have a little confusion with regards to what the rate is. So in such a case, what do you have to do on the invoice? You will be charging tax at the rate of 18%. That is the rate that you will charge in the invoice, and later, of course, you can change it based on whatever clarification you get. And second is, if the nature of supply is not determinable, that is whether it is interstate or whether it is intrastate, it will always be treated as interstate, that is different states, and IGST will be charged on your supply. Okay, so if you have any confusion, it is 18% and IGST. Okay. What is a receipt voucher? What is a refund voucher? A receipt voucher is a registered person on receiving advance payment shall issue this. For example, if you receive any money from your customer as an advance, in such a case, you will have to issue a receipt voucher. And when no supply is made post issuing receipt voucher, you will issue a refund voucher. For example, you received advance and you have not been able to fulfill this. You did, for some reason the transaction did not place, so you refund the amount to him. So in such a case, you will be issuing a refund voucher to the customer. So when you get money, it is receipt voucher. When you give money, it is refund voucher. Okay. Now next is your builder or promoter. So builders and promoters are required to pay GST on reverse charge mechanism. They have to pay GST on reverse charge mechanism when 80% of inputs, 80% of inputs that they use in construction are not purchased from registered person. That means only and only if you purchase 80% of inputs from registered person, you do not have to pay GST on RCM basis. It will be on forward charge mechanism. However, if you are doing 80% of your input from unregistered person, then in such a case, you have to pay GST on RCM basis. If any cement is received from unregistered person, again RCM basis, and next is GST on capital goods paid by promoter. GST on capital goods which have been paid by promoter, this will also be done on RCM basis. Promoter is basically the builder or the person who puts money. Builder to issue invoice when tax is payable on RCM and supplier is unregistered. Of course, he will be the person issuing invoice because this the person who is supplying, he is unregistered. Okay, so he will be paying tax on RCM and also the builder only will be issuing invoice. Okay, goods transported under KD condition. KD is your knocked down condition. So goods transported in knocked down condition, issue complete invoice before dispatch of first consignment. You will have to issue the complete invoice even if you have broken down the consignment into different parts. Okay. Issue delivery challan for subsequent consignment because your goods are moving. So on the first dispatch, you have to give a complete invoice, and for subsequent dispatches, you have to give a delivery challan. Original copy of invoice shall be sent along with the last consignment. Okay, and over here I have written KD is your knockdown condition. Okay. Now, in some cases, there are instances when invoice need not be issued. In some cases, you need not issue an invoice. You can either issue a delivery challan, bill of supply, or a consolidated invoice. So we will be studying those cases. So when value of goods and services are less than 200, and that means both these conditions have to be satisfied. That is, it has to be less than 200 also, and recipient is not registered. Only in such a case you can issue a consolidated invoice at the end of the day. So when it is less than 200 and recipient is not registered. Next, if your supply of liquid gas where quantity at the time of removal from place of business is not known, what happens in this case? For example, from your go down, you take 100 liters of liquid gas. Now, during transportation, you will be losing a lot of this liquid gas. So when it reaches, it is possible that if you took 100 liters of liquid gas, only 90 kgs has been received there. So you cannot issue an invoice for you cannot issue an invoice for 100 kg, right? Because the customer only received 90 kgs. Therefore, in such a case, since you do not know the quantity that was how much quantity will reach there, instead of issuing a tax invoice, you can issue a delivery challan. Okay. Transportation of goods for job work. Job work is, for example, you give your shoes to a cobbler, the goods you are supplying to him so that he can do some service on it, and once the service is done he gives you the goods back. This is basically your job work. So transportation of goods for job work, also delivery challan. Transportation of goods will also be delivery challan. So transportation of goods for reasons, if it is not a supply, that is goods are being transported but not for the purpose of supply, you have to issue a delivery challan. Therefore, I've cut supply. That is transportation of goods but not for the purpose of supply. Because if it is a supply, it becomes your tax invoice and invoice has to be raised. Next is your sale on approval basis or return of unexpired drugs is also delivery channel. Sent outside India but not sold. You had sent it outside India, but you are not selling it right now. You are just sending it outside India. It is a delivery challan. If you sell it, then it is your tax invoice. Registered person supplying exempted goods and service will be your bill of supply, and any person paying tax under composition scheme will also be your bill of supply. Why these are different? Because these all the ones that we studied under delivery challan, these are not supply at all. While these are supply, but tax is not allowed to be charged on them. Understand why we are giving what type of these. All of these transactions that we did, these were not supply at all. Therefore, you cannot even you cannot issue a bill of supply. What you have to give? You have to give a delivery challan. However, these transactions, these last two transactions that we studied, these are supplies actually. These are supplies, but you're not allowed to charge tax on it. Therefore, you cannot issue an invoice and you will have to issue a bill of supply. Okay. Now, coming to our last part, that is your credit note and debit note. So credit note reduces your tax liability and debit note increases your tax liability. I hope everybody knows what credit note and debit note is. For example, you sold something to someone. For example, you sold goods to A. What will be the journal entry? Journal entry will be A limited to sales. Correct? Sales will be credited and A limited will be debited. However, if this A limited gives you anything in return, if they return your product, this A limited, which was earlier debited, you will now have to credit them, correct? So to credit them, you will raise a credit note, correct? So you are raising a credit note to reverse the effect that A limited you had given earlier. So of course, since you are reversing effect means these are sales return and this will decrease your tax liability. I hope everybody now understands what credit note and debit note is. So examples of credit note is when the supplier declared value which is more than the actual value provided. So you will have to pass a credit note to reverse the effect. Supplier declared tax rate more than actually applicable. Quantity received by recipient is less than the quantity declared. Of course, if you raise an invoice for 100 and the recipient says, "Boss, this is only 40 kgs," you will have to reverse 60 kgs and this will reduce your tax liability. Recipient is demanding a refund or not to be issued for secondary discounts. Secondary discounts are any discount that you had not issued, that you had not agreed to at the time of supply. These are your secondary discounts. So in these cases, credit note should not be raised. And I hope debit note part is also similar. It will be easy to understand. Okay. Any credit notes have to be declared by when? November following the end of the financial year in which supply was made. Okay, so the November following the end of the financial year in which the supply was made. On the date of furnishing relevant annual return, whichever is earlier. So basically, November or when annual return is furnished, whichever is earlier, that is for credit note because their tax liability reduces. Now, of course, your debit note will not have any because this increases your tax liability. Therefore, government has not put any limit on it. Debit note you will have to declare when the month that the debit note is issued. There is no other criteria. Okay. So therefore, government want that what debit note to you always you tell us at any time you will be happy because this increases your tax liability, whereas this decreases your tax liability. Therefore, we have put some conditions. Okay. And your last part in this chapter is your return of expired drugs. What happens is these drug manufacturing companies, they give it to the retailers. Now these drugs they expire, they have a time limit. So the retailer gives these drugs back to the company and the company destroys these drugs. So therefore, what has to be done in such a case? So any unsold medicines are returned by wholesalers or retailers to the manufacturer when they expire. Of course, they will not be keeping it, they will return it to the manufacturer. Now, you have two options. When these medicines are being returned back to the supplier, you can return the drugs and this can be treated as a fresh supply. That means this was one supply, and when your wholesaler or your retailer, when your wholesaler or your retailer is giving back to the manufacturing company, he can again raise an invoice on them and treat this as a supply. So return to manufacturer, treat it, supply to manufacturer, issue invoice with GST, and ITC can be claimed by manufacturer. That is because since this person will be raising invoice, this person will be paying some GST. Now the GST that this person pays, he will be allowed to claim ITC for this, and therefore this transaction will be completed. This is your option number one. Your option number two is return drugs and issue credit notes. So this drugs will be returned and a credit note will be issued. So now the problem with credit note comes that it should be issued within the time limit, otherwise tax liability will not be adjusted. This is the time limit that we had studied over here. Okay, so this is the time limit that we had studied. And I hope this chapter is clear. We have covered 90% of the provisions I'd say, and you are more than ready to solve questions. And uh, after finishing this chapter, I'll see you in the next one, that is accounts, records, and e-webel.